Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right. Good morning, everybody. Welcome back to another live stream. Happy Monday to you. Hope you're doing well on this pretty big, eventful day for markets. Take a look. Doesn't take much to know that all of our charts are to some extent moving big. If you're watching gold dropped almost, well, actually at one point, 3% on the day, 3.5%. That's a violent move for gold, guys. At the same time, you've got the NASDAQ tapping into, at one point, a 4% up move. And that is pretty incredible. A 4% move from Friday's close, coming in really, really strong here for the NASDAQ. And again, coming into some resistance that we've seen back in, believe it or not, March, early March. We have recovered. Just a heads up for, reference where we are at from the lows. The NASDAQ has recovered 28%. 28%. Just so you know, right? Just so you understand this. The market was down at most 26.5%. This is how the bulls just have the edge. 27.6%, and we're not even back to those all-time highs. That's the way percentages work, right? So the rally here is pretty incredible. And what's the news? What's going on? Well, to many people's shock, the US and China essentially shook hands. They essentially said, let's pause things for 90 days and let's come to a reasonable middle ground. That offers substantial peace in the realm in terms of global trade. Because let me tell you this, if China is willing to work with the US, the number one rivals, right? Rivals, US and China. If the rivals shake hands, what do you think happens to all of US's allies? If the rivals are shaking hands, you bet your bottom dollar the allies of this nation, the US, are going to step in and make deals. Because if they're making deals with China and you haven't made a deal with the US, a fire has been lit under the proverbial you-know-whats of all the other nations who are not yet this far along in the trade deals. So where are we at? The market says, oh my gosh, we're going higher. That's what the market says. The market says, boom, that's what we needed. Because again, if people kind of laughed in the face of like, oh, UK deal, that's happening, haha, that's we knew that one was going to happen because the US and UK are like best buddies. But then you got China, the number one op to the US, comes in and says, let's make a deal. Up we go. That was the big one. That was the big domino to fall. And instead of the big domino falling, like this is how we kind of all thought trade was going to go. Like this is what we thought. We thought that, the big one was always China. We thought like, okay, UK, we knew that one. India, right? Like we think India's going to, and then we thought like maybe we'll get somewhere with Europe and Japan. No, we actually just saw the biggest domino, China, just fell. And we said, deals are coming. Oh, Alan, my friend, that's painful. Also, Alan, I just want to ask you if you have some time later today, maybe we can hop on a call. Got some fun stuff to talk to you about. Anyways, yeah, shoot me a DM on Discord. Anyways, Nick really better watch out for his bullish view on the S&P 500. I mean, so look, have I played this perfectly? No. I'm feeling some FOMO with the S&P. Okay. We'll get to gold in a second. I saw young Slacko says, what are your thoughts on gold? I will definitely take a look at gold in just a second. Let me finish up on the indices thought process. So the indices, if you remember, and I'm gonna try and do this in a way that doesn't sound like I'm just, boasting that I was right. So let me start out by saying this. I thought the indices were not going to go that far down. So I started buying stocks in light quantities here. I bought some more here. And then I actually went long the NAS here with a stop loss. So let me map this out. This is my track record recently with indices. And you guys can make for your own decision if you think like I did okay with this or if I did, I played it terribly. My trade was not good. So I went long. What did I do? I went long NAS pretty much like right here. Like I was like, okay, I think we've broken this downward structure. I think we're going higher. And so I went long NAS with a stop. Now, meanwhile, this is separate. This is a trade. My stock buys they're not like short-term trades. I'm dollar cost averaging on stocks that I like. So I bought things like Uber. I bought things like Fortinet, Amazon, Tesla. I bought many companies that I've liked for the long term as this market kind of sold. Then I traded NAS longs, got stopped out, took a loss there. But then again, added to my long-term stock buys all the way down here. So many of my stock portfolio positions are very, very much in the green. I will show you that to just show some level of, I'm not just saying that to sound good. I will show you my portfolio of stocks that I bought. I mean, I went shopping. Okay. This is a crazy day in terms of P&L. So, I bought things like Amazon, Robinhood, Nvidia, Apple, Meta, American Express, Intuitive Surgical, PayPal, Airbnb, Fortinet, Salesforce, Home Depot, Google, ExxonMobil, and Uber. Okay. So these are the things that I bought in my portfolio. And obviously they're doing really well. But I am still feeling some FOMO. Why? Because those are stock positions that I'm holding for the longer term. But I wanted a trade on the NAS and I missed it so narrowly on the NASDAQ 100. I missed this entry right here. And if you were watching, you know how quick this was. Like if you watched on May, whatever this was, on that day, this thing wicked lower in the morning. And before market open, I believe it was like right before market open, the thing had already kind of started bouncing. So I was like, okay, well, I'll wait for it to just come back into this area. And that would have been a dream setup, like sit trade wise, because I was getting bullish edge finder confirmations and I would have put a stop, below structure. That would have been perfect. So I'm feeling a little bit of FOMO because from a trading perspective, I haven't played this very well. From a dollar cost averaging and like position trading, I played this really well. Like I bought stocks when people were at peak fear. And I feel like that's a game plan that I really like to stick to. I don't really like to buy stocks when people are like super euphoric, super, bullish on markets. So I'm just telling you, like, did I play it well? Well, I made money. Did I play it the way I wanted to? No, but I might still get my opportunity. So let me express kind of last thing on this. So indices, NASDAQ, S&P, Dow Jones, these things look really strong on the edge finder. All three of the major US indices are getting over plus 10 scores. Now, when we look at these things, we see them all up today. I'm not going to be buying them here because we've had such a, we've had such a run. So I'm not going to chase. I'm going to admit that, hey, look, I didn't play it perfectly. I didn't catch this entry. That really should have been my trade. I know I'm saying that with hindsight, but I was watching for that entry and just didn't quite get to the pullback that I was looking for. And so that's on me. I missed that chance. I was pissed about it, to be honest. And then we ripped, right? We ripped here. And now what do you do in this situation? If you're feeling FOMO, I was right on direction, wrong on timing. So what do? Well, I look for pullbacks. I wait. That's what I've been doing. And unfortunately, sometimes that means you miss the move. So if I'm drawing in my fibs here, right? This extension has gone on pretty good distance. I would not be surprised if, even though, yes, we got trade deals or we've got, the promise of deals and things going forward, I still think that the market is now kind of flipping into a bit of euphoric state, and I'm going to probably try to wait for a corrective pullback somewhere between this zone that I've just drawn in on the chart. So I do still love indices long, but I have to wait patiently and look for those trades to come to me. So that's what I'm looking at. Let's take a look at some other metals. Other markets. Commodities. Take a look at oil, guys. Really impressive. It looks like we may have actually formed a strong double bottom, breaking out of this downward trend line. Beautiful move today. Oil is up 3%. So I am actually, I believe, let me check the Edge Finder reading here for this. No, we're still at neutral. So I'm going to keep an eye on this one. If we start trending higher, and we get some data this week, we have CPI data, right? So once we get some of that metrics, some of those metrics coming out, if they're promising for the story, we'll keep an eye on oil. So I like oil. What about gold? So I know a lot of people watch gold, and a lot of people who have been watching have been asking about gold. Hey, Nick, is this, because I was very bullish on gold for some time. I caught the majority of this move, ended up stopping out around here. So am I bullish gold still? The answer is no. The answer is no. I am not bullish on gold for two reasons. First and foremost, the jobs report kind of killed the bullish score. What I mean by that is that jobs beat expectations in the United States, which hurt the score for gold. Okay. So with jobs report coming in stronger than expected, and inflation, cooling off, that's a positive for gold, but we can actually go look at gold in a closer, detailed view. Gold here, right? Take a look at the bias. We can see it's getting a neutral reading. So trend has flipped bearish. That's a troublesome sign for scoring. Seasonality is still positive. Sentiment, people are now kind of flipping more towards bearish sentiment on gold. So that is a positive as well. But we had strong services PMI. We had strong manufacturing PMIs. Retail sales were strong. Inflation data was good for gold because it came down. That's good for gold because it means Fed's going to cut rates more likely. Dollar index may see some weakness, right? But that's not the only thing we look at. That's why we look at the stuff in its entirety. So we see a lot of the metrics here kind of pointing towards mixed to bearish sentiment for gold. So gold for me is exactly what the Edge Finder has oriented. It's a neutral reading. I wouldn't be surprised if we bounce off this level, but I would be surprised if we just ripped through those highs. Like, I'd be surprised by that move. To be honest, I would also be surprised if we saw a massive move like this too. So when I say neutral, what I mean is I think like the most likely scenario for gold right now is that it respects support, respects resistance, and maybe just chops around for a while. We'll see. But that's my take on gold at this time. When I get a neutral reading, price action looks kind of mixed. I mean, you are still in a big picture uptrend, but let's not disguise this. We've been in a long-term trend for some time. And if you get this week a decisive move lower, it's possible that gold's kind of day in the sun may actually be kind of due for a true reset, a true pullback, right? We saw that in markets. We're looking at a weekly chart. We saw that this year in markets. We needed this bad, right? We needed a reset kind of move. Many people thought it was going to go much lower, right? We saw a 20% correction in the S&P 500. Typically, that's a buying opportunity. That's what we treated it on this channel as. You saw doom and gloom YouTube get crazy during all this time because people were like, hey, this thing's going down 50%. And maybe it still does. But again, my bias remains to the upside. This is a dip I buy, right? In the last 20 years, that's a time where where everybody freaks out, you actually start looking for opportunities. And so that's pretty much what we've done. Companies like Tesla, I bought a lot of Tesla, and this thing, oh my gosh, it's up. What is that up today? Tesla's up 8% today. Like, this market is ripping. 8% up for that. Let's take a look at Apple. I bet Apple's up. Yeah, Apple's up 6.2%. That's big for a huge company like that. What about NVIDIA? Oh, NVIDIA's up 4.38%. Google, which has been struggling here recently, up 3% still. Robinhood, this has been one of my best stocks of the year. Look at Robinhood, up 8% today. What a beast stock. There's another one I wanted to look at. Oh yeah, Delta Airlines. This might be like one of my most impressive percentage trades that I've taken. I pretty much bought this thing. I'm not gonna say I bought at the low, but it was pretty close. And I mean, I'm up pretty nicely on Delta at this time. So we'll see if that can hold its gains or if this market wants to cool off a little bit. But when I look at, S&P, when I look at NASDAQ, I do want to be a buyer of this market. Price action seems to be decisively turning bullish, right? We've got higher lows, higher highs. So those traders are looking bullish. We've got, well, here's maybe something for the bears. Nope, not even for this. The 618 got declined, rejected, right? So sellers probably tried to hold this level. Boom, we broke through that level. Resistance consistently has been taken back from the bears to the bulls. So again, on a technical basis, I think it's kind of a hard thing to defend at this point. And I saw this, I remember in 2020, guys, this was one of the craziest things. One of the most polarized I've ever seen the markets was in 2020 when this thing had just crashed immensely. Everyone had this drawn on this chart. Did anybody else, just curious, did anybody, Lincoln says bears back into hibernation. Yeah. Did anybody else have this drawn on their chart? I'm just curious. 2020 daily chart, Fibonacci retracement from the high of the move to the low of the move. I can't tell you just from memory how many people I saw in the trading world that had this exact chart drawn up. And every time we would take one of these levels, I noticed this. This was a lesson to me. It was like sometimes a pullback, you can tell it's not a pullback by the way it reacts to the fibs. So like you had this level get checked, we stopped there, and then we just bulleted through there. Then we did it again. We stopped, and then boom, we shot through it. Came back, retested it, came up to this level, respected it briefly, higher low, boom, we took it out. If you see pullbacks in this type of environment get turned into breakouts, you have to acknowledge that. So take note on a technical basis, when we are looking at the S&P 500 and people are record-breakingly bearish, I'm not making that up. If we take a look at the AAII Investor Sentiment Survey, we've talked about it a lot on the channel. We had 11 straight weeks where people were greater than 50% bearish, okay? The bears were very bearing, okay? And so there was 11 straight weeks. It was a record-setting duration to have a 50% or greater read in the AAII Investor Sentiment Survey for bears. Massive, right? Massive, massive bearishness. And so in this circumstance, right, what do we see happening? We see the ultimate short squeeze. We see all the bears running for the hills, running for the woods, I suppose. They're back to hibernation. And it is like a bull run, if you will. So I think that's where the name comes from, the bull run, right? They're just completely wiping the sweeping the decks with the bears right now. And well, could that change? Of course it could change, but timing that has been a tricky thing for a lot of people this year. A lot of people have gotten themselves into a lot of trouble trying to say, this is where sellers are going to take over. This is going to be where, like maybe they do, but I think the most likely scenario here is that we are probably on to the next story, which we know from the excitement around when we saw the elections going on. The excitement was we're going to get tax cuts and deregulation in corporate America, and that theoretically could boost business profits. And so I think we're possibly on that side of things now. I think we're on the downhill. Like this was the trade, dynamic. I think, right? We peaked out in terms of concern. And I think we're like here now. Like I think we're not here. We're not here. I think we're like here. Like a lot of the trade worries are now behind us, at least for now. Okay. Nick's way too bullish on S&P. Oh boy, when he's wrong. And if I'm wrong, I'll take a small loss, right? So like, let's say, and this is where it matters, right? So I am no doubt I've been bullish. Like I've been bullish pretty much this whole time. Like I've not wavered too far. Over here, I was cautious on stocks. And again, you can go look at my videos and streams at that time. I was really watching gold a lot more. And then when it fell initially, I was still watching gold, trading gold, really not paying attention to the indices. I really started getting bullish over here, which was way too early, but ultimately ended up being the right call. So I'm, my cost average between like everything in my stock portfolio is probably around like an average of here. That's just a guess. And so if we see trade-wise an opportunity where NAS pulls back to support and I go long, you say like, oh boy, when he's wrong, like I might be wrong. So I'm not saying, that might be true. You might be wrong, or I might be wrong and this thing might be going lower. If that happens, we manage risk. So what I mean by that is, let's say that this works out and we make a lot of money. That's great, right? But let's always do our research on what happens if I'm wrong. That's always important. I'm going to cut the trade, and full transparency, I'd probably try again at this level. And if that goes wrong, then we move on. But we're not going to risk 10% of the portfolio. That would be silly, right? That would put me in a world of pain if I made those decisions. But I'm talking about probably somewhere in the realm of risking 0.5% on the account and then maybe 1% on this setup. So I could lose out on like 1.5% to 2%, depending on what the edge finder is scoring. I do have a dynamic risk approach. So my point with this is, like, whenever you have an opinion on markets, someone said this to me a long time ago, and it has stuck with me for a long time, which is basically hold strong opinions loosely. Because everybody on YouTube and Twitter, they have big ideas and big thoughts. Like, clearly I am bullish on the S&P and the NASDAQ and all that. Yes. But like, if I'm wrong, I'm not going to get destroyed, right? That's people who are like leveraged up and they're long a bunch of call options, but I don't do that. Are there traders out there who make way more than me and who are, bigger hot shots with options or with like leveraged CFD products? Like, sure, there are people who are, they're probably up like 30% on this move or 50% on this move, or with leverage, they might double their account, calling the bottom and trading. Like, some people might be doing that. That's not me. And I'm not a very like high risk, high reward type trader. I'm a low risk, mediocre returns. And I accept that because I'm working with a larger capital basis. I'm at a phase in my life where I'm married, my tolerance for risk has declined a little bit from when, I first got started, and that's okay to acknowledge. I think I saw something on Twitter. You guys might find this entertaining. Somebody on Twitter I saw said, as soon as I know a trader gets married, I unfollow them because their risk tolerance is no longer there. I thought that was funny. I mean, that's brutally, that's a strong take, but I can respect it. Like, I'm not that guy. Like, I'm not going to be the guy who you get on the channel and I'm like, dude, I've got, 150% leveraged. And then I'm just, I'm all in on the NAS. And, I from my risk tolerance, I have a relatively low risk tolerance if we're just looking at percentages. So, that's posted by a gambler, Nick. Yeah, I mean, it's fair. It's fair. I mean, I get it. I think it might have been a joke. I'm not sure, but you get the perspective. It's like, oh, if you're a defensive trader, I don't want to involve. And people don't love, like, not everybody loves my style, and that's fine. Like, some people are more like, you got to risk it to get the biscuit in trading, and I'm like, that's cool. For me, I'm just here to do this for the next 20 years, and I got to do stuff that is okay with my personal risk tolerance. I do think, people always ask, like, how much should you risk per trade? Like, should you risk 1%, 2%, 5%, 0.5%, 1/4%? And the real answer, we had this conversation a while back on stream, but we talked about how what the right answer, I think, is maybe the right answer is what is comfortable to you. What can you function off of? By the way, new channel member, thank you so much, Lano FX, for becoming a channel member here on the Trader Nick YouTube channel. We appreciate that support. I always say this, but anybody who becomes a channel member, you are funding our our coffee bill here at the office. We do go through a lot of coffee, and I think we actually need to make an order of more coffee. So thank you. You're just in time to help us out with the editors and the rest of the team here. Like I said, we love our coffee. So thank you very much for becoming a channel member. We appreciate that. And if you have any questions, I do try my best to prioritize member questions. Speaking of questions, we did open just a second ago. Thank you to Chandler or James, whoever dropped that. We're now going to take some questions from the audience. If you have a trading related question that I can help answer for you, I'll do my best. Drop the question using this link here. We just dropped it in the chat. You can ask your question in the chat, but it's more likely to get answered if you ask it through this form, just because that gives me a chance to look a little closer at them and not have them like kind of scrolling past me, if you know what I mean. So yeah, 20% risk per trade. That's a really aggressive, Ballout says you only have 5 trades to blow your account. It's actually probably less if you think about it, because you're going to get margin called way before you get to that's probably like 2 trades, and then or 2 or 3 trades, and then you might get margin called. So FX Shadow, I don't know if you're, you might have been kidding. If you're not kidding, please be careful. Just because, I don't disagree that you probably have some great trades setups, but even the most confident trades, like I've had some, what I've found, and I don't know if anybody feels this way too, but sometimes it's like this looks decent enough trade that hits it really hard, like goes really well. And then it's the ones that I feel like really good about that actually work the least. Like that gold trade that I took, when I took this gold trade back over here and like rode that, I didn't really feel 100% about it. I took a loss right before. I was early. I stopped out. And then I was like, okay, you know what? I feel decently good enough about this, but gold is kind of still on a longer term overbought. But I took the trade, put a stop loss, and it just ripped. Like the ones that sometimes work, sometimes just surprise you, Anyways, if you guys asked questions, I'm going to pull up that form and we can take a look at that together. So I've been doing this on stream, just a little bit of time each day, answering questions from members. If you have one, like I said, we dropped a link in the chat a moment ago. It should also be in the description for you if you'd like to ask a question. You can do so there, and I'll pull it up on the screen and we can talk about it. Okay, so gold, by the way, 4-hour chart is respecting this area. Interesting. NASDAQ, so here's the thing. Because I want to buy this thing on a pullback and have been saying that for a minute, I think the most likely scenario today for NASDAQ is this. Just because I'm waiting for a pullback, I think it's going to just I'm just kidding. The market doesn't purposefully do that. But I do think on a big scale, I think that's actually a feasible thing that could happen. Like a lot of people are now turning the ship to get bullish, and it may be too late. And so what we might see is just the squeeze take place. I wouldn't be surprised. I mean, the China-US deal is a shocker. That's a big, big announcement. Again, I kind of was cautious going into the weekend, like, oh, I don't know how well that's going to work out. Maybe, but clearly, you did kind of expect some level of touting from both sides. Like both sides want to come back and say, we got to win. So there was a little bit of expectations there, but I think we're enacting a 90-day kind of duration to give us time to negotiate. The market's like, oh, we got 90 days to feel great. So that's, I think where you probably got the burst in energy here. Yeah, Alan says the fact that both sides had positive things to say really adds to the bullish sentiment. Yeah, Alan, I'm with you on that. Okay, so let me just check to see if we had any questions. Oh, thank you. We got 3 questions here, and they look good. So let's just pull this up. So our first question of the day, thank you to Brian, Cameron, and OT for your questions. Take some time to answer them here. So the first question is from Brian. He's been trading for 3+ years. Primary goal right now is to become a funded trader. And their question is, what are your daily projections for gold today? So I mentioned this a little bit earlier. In terms of the chart for gold, I'm really neutral. If you're new to my channel, what I do is I take a holistic view of the fundamental analysis or macro situation, the sentiment analysis, what the crowd is feeling, and the technical chart. And so I look at all of that to make a decision. So the technicals, I'll tell you this, the technicals look strong. Like we look like we're in a really solid uptrend, but that's not where I would leave the conversation. Like I'm not just gonna say we're in a bullish trend, let me just buy here. And while that might work, for me, there's a little bit more that research that I has to go into it before I make a decision to buy or sell a chart. So if I go over here and we take a look at the economic data, technical data, and sentiment data, is gold on my system a buy? And the answer is no, we're getting a neutral reading. I talked about this a second ago, how the edge finder functions. And actually, real quick, maybe Chandler or James, if one of you guys could drop the link to the Telegram channel, maybe we'll do some more in-depth breakdowns on the edge finder. I'd love to do some of that. The edge finder basically helps to incorporate all that data into one place. So when I look at gold, right, the readings for gold, we had some services and manufacturing PMI data that come in better than expected. That's a bearish catalyst for gold. Because remember, the way we score, the way we think about economic data in terms of how it impacts gold is strong economic data, good economic data makes people feel more confident and they sell gold, right? They buy the dollar, they move out of gold, they're less worried about the economy. And that's just the way kind of it falls, right? So when we talk about, gold holistically, I don't really have the same confirmations on the fundamental analysis level. So it becomes a neutral reading for me. So I think we probably respect support, but that's not a trade I would base it off of, right? We could also break completely. So I really don't have a directional bias. So gold for me, are we at key support? Absolutely. Are we in an overall uptrend? Sure. But those two reasons are not enough for me to take a trade. I've got to have the fundamental backing to really give me the confidence behind taking a trade. So thank you, Brian, for that question. I hope that helped a little bit. Up next is Cameron. Cameron's been trading for 3+ years. Primary goal right now is to find a profitable trading strategy. Question is, dollar Swiss. I'm currently up 200 pips with a trailing stop. Congratulations. What levels do you see of interest on the downside and upside? So if you are up 200 pips, dollar Swiss has what? Has it been bottoming out? Let's take a look. Yeah, it's been, oh, look at you. Congratulations on that move. 200 pips. You must have gotten it like around this area. That's awesome. So we're sitting at resistance. There's no question. You're sitting at a big level of resistance. Now, whether you determine to close your trade, to take profits or whatever, that's going to be up to your rule set. Like what strategy are you following? Are you trading zone to zone? Do you look at fundamental analysis? Do you look at technical analysis? So what I would say is that if you don't have a technical kind of like rule set for what you should be doing with your strategy, I would just say, maybe, and this is not financial advice, but just something to think about. Maybe you put this trade to the side, do what you want to do with it. But really you should have a game plan, right? So before you take a trade, you should know, am I going to take profits if it hits a resistance level? Or if I'm trailing a stop and I'm truly trailing a stop, does that mean, I get down to, what am I basing this off of? If I'm on the 4-hour chart and I'm seeing, we're coming into resistance, but if we get this kind of move, I'm going to trail behind here. Like you got to have some sort of definitive things that you're going to do. And this goes for everybody in the audience right now. If you're in a trade and you don't know what to do, pause. We need to know what we're going to do in all circumstances. You have to know with every trade that you place. A lot of people obsess over entries, and this is a good example. I'm not, calling you out or anything, Cameron. I'm not trying to, but think about this for a second. If you took a trade and you focused only on the entry, great, you got a good entry. That's awesome. But many traders forget to really give that much attention to the exit strategy. So do some back testing, test things out, and determine there's not a right or wrong answer. Some traders are small profits and they just close stuff out quickly. Other traders hold things. It sounds like you're using a trailing stop. So maybe you're looking for higher lows, higher highs, but you've got to predetermine what you're going to do before you're in the trade. I hope that helps. Okay, so let me just refresh our data here, make sure we're okay. All right. Next question is from OT. OT has been trading for less than 1 year. Question is, I'm curious, do you incorporate fair value gaps on higher time frames in your analysis or trading decisions, or do you mainly focus on other setups? So I personally don't use any sort of smart money concepts or ICT related things. I think that fair value caps, if I'm being, very honest with you, I think that a lot of the smart money concept stuff is just a framework for traditional age-old technical analysis. It's just calling it a different name. So when it comes to fair value gaps or whatever you want to call that, just a solid bodied candle that you're looking at, there's many ways you can call that. I just personally stick to market structure, support and resistance. On the technical side, that's all I need. The straight up simple textbook analysis. And what I would actually say, to be completely honest, is a lot of the smart money concepts, SMC, ICT stuff is also just straight up standard technical analysis with a makeup and cool fancy namings. That's my genuine opinion on it. I'm not disrespectful. If it works for you, if the framework of SMC, all that stuff, if it works for you, then excellent. I'm not going to dispute. If it's working for you, do your thing. I'm not one to tell you you can't trade a certain style. I'm just telling you that personally, I don't think that's necessary to get, to watch, 150 hours worth of content just to kind of get the same technical analysis level skills that you can pick up in your library for free. Anyways, let's keep going. The official compounder, very cool name, has been trading for less than 1 year. Primary goal right now is to improve their trading psychology. Good morning, Nick. Hope all is well. I've backtested for 6 years from 2018, all profitable years. But now I started live in 2025 and I'm currently in a drawdown. I've lost 9 trades in a row. I don't revenge trade, but the loss streak has made me doubt. Like when I decide to go live, I get losses. What can I do what can I do? Great question. And actually this is like perfect timing. Let me think who did it. Chandler or James, one of you guys, we did a video on Saturday. It was the how to know when to quit your trading strategy. That video, if we could drop the link to that for the official compounder, that if we could drop that link to him, that would be amazing. I did a video this weekend basically on how to know. Thank you, by the way, for this. Appreciate you guys on that. So yeah, that video might help you to think through that question. I could go through that in detail, but that video is well done by our editors to kind of keep it concise for you. Basic idea is you should kind of have an idea of what a normal drawdown looks like before you trade live, which you clearly probably do from your back testing. So ask yourself, with a 9 trades loss in a row, did that ever happen in your back testing? For me, I can tell you 9 trades in a row lost is very possible. It's very possible. I use a relatively tight stop loss. It happens. It stinks when it does. I'll never act like that doesn't stink, but it is part of the process, going through drawdowns. It's part of the territory and it stinks. It's hard, but it's, trading 101. Next up is from Ivan. Ivan has been trading 1 to 3 years. Primary goal right now is to become a funded trader and asks, is the GOAT funded prop firm a good prop firm in your experience or perspective? Yeah, so Ivan, I can't really answer that because I don't know much about it. I can't really give you a fair answer to that, so I'm not going to pretend to be knowledgeable about that firm. Let's see. Did Nick just say he uses a tight stop loss? I'm cooked. Well, Quang, I guess it just depends your time frame, right? It's it may not be a tight stop loss if you're looking at the 15-minute chart or the 1 hour, but tight stop loss in reference to the daily chart, you know what I mean? It's depends on your time frame, I suppose. It's not tight in the sense that if you pulled up a 1-minute chart, it would look like a huge stop loss, but it's just to cover that. What I do is my position sizing is way smaller than perhaps somebody who's scalping with a tight stop loss, because then it's got to be a huge trade. Ball out, you are a troll. I know you are. He knows what he's doing. Chandler, he's pranking us. He knows what he's doing. Chandler or James, whoever typed this. Ball out knows. If you guys ever want to know live stream timings for who's coming on, bookmark this page, a1trading.com/live stream schedule. We do keep that up to date so that you can see kind of what the layout for the week is. Anyways, Ball out, you're a troll. You're a funny guy. Let me just really quick see if we have any more questions coming in here. Okay. Taylor, next question. Taylor says they've been trading for less than 1 year. Primary goal right now is to learn a little bit more about fundamental analysis. Why is the Australian dollar falling? How is it being impacted by the trade negotiation? Is the Australian dollar falling? Wow, that's interesting. Oh, you mean against the US dollar? Because let me take a guess that the Aussie against the yen is up today. Yep. Let's take a look at Aussie versus the Swiss franc today. Yep. Okay. So the Australian dollar, if we were to do AXY, for example, can I do this? The Australian dollar currency index is sort of slightly down, kind of flat today, because if you stripped out the US dollar, it would be up today. So the reasoning for that is because the US dollar is having an excellent day. Remember that currencies are confusing and hard to trade for a simple reason. They trade in pairs. You have to be in tune with what's happening with both factors, the dollar and with the Australian dollar, right? So that's why it is Forex. and don't get me wrong, I love trading Forex. I've traded Forex for, oh my gosh, like 8 or 9 years at this point. I've traded for a long, long time. Maybe not that long, maybe like 7. I started in stocks and then I went to Forex. But anyways, the difficulty here is that the dollar index is up a lot today. Why? Because the US and China seem to be willing to negotiate and on the same page about wanting to find a resolution to everything. So the dollar's up. The dollar's really strong because of that. So is the Australian dollar weak today? Well, kind of. It's weak against the US dollar, but it's strong against most other currencies. Let me see if pound Aussie, here's a challenging one. Yeah, so pound Aussie is actually down today, suggesting that the Australian dollar is strong today against the pound. Euro Aussie, I bet you this one's coming down. Yep, Euro Aussie coming down, suggesting that the Australian dollar is strong today. So it's kind of, this is the difficulty with Forex, right? When you're trading Forex, you have to trade, you have to consider both sides. Actually, you know what Chris Pulver does? So here's a little Pulver shout out. You guys know him and love him on the show. What Pulver does is when he's bullish on something, let's say he's bullish the Australian dollar or he's bullish the Japanese yen. What I've seen Chris Pulver do is he trades a basket of currency pairs. So let's just say that Chris Pulver is bullish the Australian dollar. I guess we could check what his positions are within the group. He shares all of his trades in our Discord. The Australian dollar, right? If he's bullish the Australian dollar, instead of just buying AU, Aussie versus the US, he might buy the Australian dollar, buy the Australian yen, and he might buy Australian dollar versus the Swiss franc, and he might short pound Aussie, he might short Euro Aussie. And what he's doing by doing this, right, is he's saying, I am short these pairs, right? He's taking small positions on all of these. So instead of taking one big position, AUD, USD, right? The alternative is to do this, which is to trade a basket. So if you really want to focus the Australian dollar as a currency trader, this is fun. I love this conversation. You can isolate the Australian dollar. You can rule out the kind of noise of the other currencies to a degree simply by trading it across a basket of positions. Now, I'm not saying, like in all of these cases, what are we doing with the Australian dollar? We're long, right? We're long Aussie across all these currencies. The difference is we're ruling out that if on a day like today, even though the Australian dollar is up against everything else, the US dollar is beating out the Australian dollar, sending AU down. Does that make sense? Does anybody do this? Anybody use this approach, like trading baskets? I know in terms of Forex stuff, Chris Pulver does this quite a lot. I know for years now, Chris has been playing this against the Swiss franc. He's been, kind of basket trading, if you will, the Swiss franc. I did an interview with him like multiple years ago, and he was like, I do the Euro Swiss franc long, and he's also, long Kiwi Swiss, and he's got just all of them kind of at once. to spread out his bets to not kind of have it all in one kind of exchange currency. Hopefully that makes sense. Anyways, today, guys, in the office, kind of an exciting mini update. We have an intern who just started today. So I need to hop off and go help with that process. She's just getting started with she's doing some social media posts for us this summer. So I'm going to pass you guys on to great hands. We've got the one and only Ivan FX, also known as Yen Man. He's had multiple nicknames over the years. We've called him Yen Man, King of NASDAQ, back in the day, called the NASDAQ bottom to a like literally he joined the stream and the NASDAQ started going up from that moment. In fact, actually, wait a second, Ivan, I don't know if you know this, but I could be wrong. And maybe I'm off on my days, but I'm pretty sure that level that happened never actually retested. Like you came on and it was a Monday, right? That was a Monday. This was, yes, literally Ivan showed up to the stream and that put in the bottom on a massive 28% rally to the D. Ivan and I literally were like, good morning. And then the market just ripped. So, Ivan, as you come on here, maybe you can help us all out, just pump the NASDAQ. So anyways, up next, after this quick break, Ivan's going to take over the show here for a little bit. You're in good hands. Before I take a break to let him on, just a reminder to everybody who's watching, he has his own YouTube channel. If you enjoy his commentary, do us a big favor, go subscribe, go find him. He does one-on-one coaching and much, much more. Stay tuned. Ivan's up next. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hi everyone. Yes, I did call the bottom, and if you check time right now is kind of when I bet earlier than that, but as you can see here, it says 1549 and about 1547 and about 16,600 or so. I said this might be the bottom. And lo and behold, I think we were tested maybe that price, maybe one more time later, when it came back here, about 9th, about a couple of days later. But yeah. We are going all-time high. Isn't that great, people? Isn't that great? Now, we have a bit of a new high today. We have a bit of a pullback. And I love my job today. Because the amazing president of the United States of America and China, with the amazing president of the Republic of China, People's Republic of China, Xi Jinping, allegedly, at least, seem to have agreed to a 10% tariff only instead of 145, and that has sent NASDAQ higher. The winner takes loser money. Yeah, I would agree with you. So that's why you have to have well, that's kind of why you have to have an edge. And so if you educate the one that always loses, well, somebody else is going to lose. But on the other side, if you're always the one winner, if you're always the one winning, if you always have the patient, then you can, in my humble opinion, you can become those who do win consistently over time. Because it's all a game. It's all a game. I'm sorry. It's all a game. But yeah, banks, brokers wins. Yeah, I would agree with you on that one too. Yeah, but if you're holding the stock market for 100 years, everyone's gonna win. But you know who's gonna cash out when things go south? The impatient one. Are those losers? Well, I don't know about that. But what I do know is that I said yesterday in a meeting that was publicly available for you that it was dollar bullish going into this week. I was a bit uncertain about the day and the time, and I was like, okay, I think we're going to go higher in May, potentially until CPI, and then CPI can tell us if we're going to continue. Lo and behold, and I said, and I probably don't say that too much, but it was as long as Trump doesn't do anything about tariffs. And sure, hit it. And I believe this reason going higher is because we now believe that CPI in this is May 12th, so June or a July number is going to be higher than expected. Okay, can't wait for the Lambo when I'm 120. Dragon. All right. I didn't say it took you 120. You need to be 120 until I said if you hold for 100 years, and even if you hold for 10 years, statistically, you're supposed to win. You're supposed to make money out of the stock market. How much? Well, I can't tell you that. But what I do know is that most of U.S. workers are in the S&P 500 somehow, some way, and they seem to be finding that a good investment, and they don't pull out, and they don't freak out. So why shouldn't we? Smart money were accumulating dollar for the past 2 weeks too. I would agree with you. 24/7, Warren Buffett was famous for saying that you can't invest for 12 months and you shouldn't trade for 5 minutes or in a day. Also, Warren Buffett is the king, and I really regret seeing his current condition of hold, low debt, legacy, proven companies that is going to be there until we are 120, and that is kind of a company like Coca-Cola. So that's pretty much okay. Question for the swing traders: are you still looking to short dollar or not? I think I can take you on that. Okay, so I'm supposed to be the mentor here, right? I'm supposed to be that mentor, right? And supposedly we're supposed to have a meeting like an hour ago or so. And in that same meeting, the theme for the meeting was how to become a better trader, how to become from break even to profitable trader. And what I said, and what I continue to say, and I've always said, I will continue to say for the next 10 years, is trade what you see, not what you believe. And when you see a market going higher or high, do you then believe we should be selling dollar? And I think the easiest answer to that, if we go to retail positioning. Okay, chat. Before we look, do you think that so number one is, do you think that retail is most short at the moment? Or do you think and number two, with some down arrow or something, do you think down is for dollar down and up arrow for dollar up? Do you think that retail, generally speaking, right now as we speak, is positioned buyers or sellers? Retail is short. Dollar just went higher. Retail sentiment says dollar. I need to see it faster. Symbol. No. DXY. Can I double check only dollar? Can I do only dollar? Am I braining myself right now? Okay, let's look at dollar pairs then. Fine, whatever. Indices, commodities. So mostly buyers, so mostly short on dollar. I was argue in between, and I would argue in between, I would argue in between, and I would argue short, buying dollar, and I would argue selling. So averagely, yeah, they're more than anything else, depending short dollar, and dollar just went higher. And that is why that mindset is very, very, very dangerous. Because if there was one, I think it was Yusuf, he said, if I thought that we can close the gap, we can fall down and then close the gap, coming down to 56.61 on S&P 500. And I'm like, no, you cannot do that. And the reason why I want to say that is when we have a higher high, when we have technical higher high, and the reason why we have a higher high is because we have reached a deal. And for that deal to be rectified in the market to go down again, is either that the deal is gone or that we've hit targets that whatever that sent the market higher is no longer there. Right? Follow what the market is telling you to do. If you believe a certain way, it's all okay. I can't remember. Short version is it's going higher, it hit target, it can turn lower. Look for technical reasons. Look for technical setups. Look for a reason. Look for whatever is in your reasoning. But currently we're bullish. We are higher high. We have seasonality going higher in dollar. Everything in the dollar bullishness is going for it. Wait for it to turn around. Okay. Thumbs up. Yeah. And I believe too that we are dollar buyers is short term, and it can even turn around on Wednesday when CPI comes around. But I just don't want us to have a belief that something can turn around 180 degree when something just made it go even higher. You know what I mean? Protect ourselves, because I've been in that theory of whoa, we're going lower now. Okay, let's buy it. Let's going into a buy season and look for it to go higher. Yes, possible. And it's possible for your dollar to go to 119. Sure. Go ahead. Great. But what is the reasons and what is the drivers? And I've always said this to you guys. What is the driver of the market is always going to be the paramount. And right now it has been the tariffs. Tariffs are still going to be there. Okay, for at least the next few days. And then it's going to die out. And there's going to be other reasons. And there's always going to be a crisis. So in the big scheme of things here, what have you learned from these tariffs? Because it's going to come back and kick you in the leg, and it's going to make you fall into the dirt yet again. Okay? What did you learn from this situation? Did you trade profitably? I've seen people like Maxi. I can call out your name because you're a good dude. Been insanely profitable lately. Everything smack. Everything is great. Everything is great. Everything is great. Whatever it is, everything is great. He's one of those who's in my DM sending me his chart setups, everything. Fantastic. I love it. Doesn't need to be more than that. Right? Your dollar to 109, I 100% agree with you. That's totally possible. But as I said earlier in the meeting, I said, let's look for evidence, not what we believe. So we have a low, but we're currently at weekly target on a Monday. That generally tells me we're going to go higher before falling again. And that's just money flow. So let's go into some setups here. Aussie yen. I said about an hour. I said last week and yesterday. I said this is bearish. No, not necessarily. I said risk off. This one should go lower. Okay, my bad. I'm sorry. Technically, if you want to buy yen pairs at the highest high, look for it to continue higher at least. Okay, look, because you're never going to get 145 and then tomorrow. You're never going to get 146 tomorrow. And if you do, something is broken. Okay. Then whatever buy setup that you had doesn't work. I don't know what day I thought I was looking for a buy here or something like last week. And I regret like a dog that has gotten his food taken away from being naughty. I looked there, probably more here, more than anything else. I looked here and thought, should I buy this one, either current price or a pullback? And I didn't take it. I didn't take it. So there is, and then I also said yesterday I want to buy dollar yen. Market showed me who's the boss, made a higher high, and then this morning with the announcement, bang, smack higher, straight into profit. There's nothing I can do about it. I'm sure you're very risk on this time. No, I was not risk on. I was risk off. I was dollar bullish. On the yen pairs, and no, my memory says shorting yen pairs. But okay, cool. That's what my head says. And no. I've said dollar higher for 2 weeks now, because that's May. Don't confuse me. And that leads me to gold. Okay. Chat again. Question mark. Are we going to make a new lower low? Or are we going to make a new higher high? In the with the information we have today, are we going to go higher or are we going to go lower? $24 Betterment says new lower low. Men, okay. I'm sorry. Men, I do apologize. I'm really sorry. I'm sad, but I'm sorry. But okay. No bias, Huntsman. Okay. Everyone, most of you guys saying lower. Why are we saying lower? Because that was the reaction today. That was the reaction of the lack of, or the resolvement of the tariffs. Okay, trade what you see, not what you believe it should do. Right. So it made a new lower low, or it made a new low. Technical bearish. Believe it. And the reason for it is higher inflation, more than likely coming in now, because there has not been any, very little products have been sent from China to America for the past 1 month and 1 week or so. And whenever there's products coming, there's going to be very little of those that is there. So price is going to go higher, at least short term. Second of all, and that's going to come in, that's going to hit the CPI for June and CPI for July, posted in June. And second of all, we have our resolvement of the tariffs, so risk is lower. Okay. Now the question is, when did we have tariffs? We had tariffs at 4th of something. That would be 4th of April. So about 3,000. We are about 3,235. Are we likely to go back to 3,000? But it's definitely a target that you have to think about. So my gold higher is definitely for sure. Definitely, gold going higher is definitely for sure had a catastrophic failure, engine failure at the moment, I would argue. 2nd April, yeah. So, I'm sorry, you can do it correctly then. 2nd April? 2nd April? 2nd April? Was it 2nd April? Yeah, it's probably more than... Okay, then if it's 2nd April. And I think Sean is a very great guy, fantastic guy, good looking, very knowledgeable. So 3,120. Is price going down to there? More than likely. I'm just looking behind my camera. Oh, why am I not in camera frame even? you said that you had an agreement of having you and gold not being together. Yeah, sounds like a toxic ex, mate. Can't get enough of her, eh? Yeah. Second of all, oil. That's not necessarily what I meant here, but definitely bullish. Definitely bullish now. With high inflation supposed to coming for America and the release of the negative trade war, and also, to be honest with you, where China reported on Friday that they had record imports of iron ore, so that should be positive for oil, given that China is the biggest consumer of oil. And if they can get back into business, then this one should definitely then this one can definitely be back in business. Yeah. Yada. Good. Hey, so I'm bringing a pullback right now on Nasdaq. I don't know if that is good enough for you, but it's good enough for me. And yeah, 2% down, 3% down there. It's a higher high. It's a target for the week. So you do you in terms of entering. But to me at the moment, anything is good. The only thing that I said earlier today is I said that maybe the weakness in June, July, August, September may not come this year. And what I mean by that is that we normally rise coming into June, rise again, or end of May going into June, and then August, there is like or July, August, September, depending on when there is a real changing event, we have a bit of a dip. Well, that can definitely happen this year as well. I just don't know if current we are also can always happen. I'm not going to say no to it. I'm just saying be aware of it. That it might happen, but I think that it's about cancelled because I feel like everyone who wanted to buy the better lower price have gotten their money back, had gotten their money. Betterment 24/7 Betterment says that he was expecting this move. I can't say I expected it. I'm more by the fact of when do we have? Because if I'm going to wait another month and I'm going to say every week it's going to go higher because Trump is going to make a deal, I will sound like a broken record and a parrot in the end. So by the fact, okay, thank you. I'll go and buy something then. What surprises me that Aussie is making a lower low. Euro is not, pound is not, New Zealand not really, and dollar Swissy somewhere out in the ocean. And I said yesterday, Swissy lower, New Zealand Swissy lower, CAD Swissy lower. How wrong can I be? But that's the beauty of this right now, what it's currently showing me. If we break the bottom of this doesn't matter if it's CAD Swissy, CAD yen, or dollar Swissy. It doesn't matter the currency price or whatever. If it breaks the bottom now, dead as a fish. And right now, this Aussie Swissy looks fantastic to the bottom side now. And you're like, whoa, what's going to happen? It's going to continue lower. How is it going to continue lower? I don't know. But if it breaks 53.70, to me, it's an automatic. We have done the bullishness of it. We are done. We are over. Aussie dollar way too overbought. Yeah. Also, yeah. I always see Aussie dollar as a mirror opposite of dollar. And if we go, I don't know which one I can check this one. I don't know. If I check dollar Aussie, well, Aussie's not the weakest today, so maybe a couple of 1 hour then. Still, yen is weaker, but it's still much risk on ish. But yeah, cool. What can I say to you? It's more than anything else. But I can. What has happened has happened. So if we're going to continue lower on the pound dollar, for example, also gets to a dollar, I need to see lower lows. We have hit target, and currently I see bullishness. So that is all trade setups. That's all trade sentiment, risk sentiment. Sorry, flow of money of how these events normally happen. That doesn't mean bullishness. That doesn't mean higher high. That doesn't mean. It just means that me as a seller, I can't sell now because one is pulling back higher. I know my mates selling this one has taken profit. They're like, cool, great, fantastic. We our target at 31.62. Done for the week. Going now, it's about 50-50. CPI on Wednesday is maybe the next time I can look for a volatility event. And if then in between we are making lower lows, all good, all good, all good. Then I can do it. Okay. And then yen pairs, kind of the same thing, but seeming like they have a lot of bids to it. So, as I said earlier, on yen pairs, if buying, not financial advice whatsoever, I'll go into day trade. I'll be like, okay, small target, small lot size. See if we can ride this one. But be careful, it has more losses than normal. And don't bring your emotions to it. It's only gonna. What about New Zealand dollar SAL? Same situation. I want a new lower low. Came back fantastically to my to the level we pointed out yesterday in the group. So but yeah, target down to 58, 11. Sorry, so we still have legs. It's just a dollar index in itself as a target. So I'm a bit cautious. I'm not going to go. I'm not full. I'm not full. I am not fully convinced that that's is the way it will go short term wise, but I hope. I pray. I shall pray. Euro New Zealand coming a bit back up again. Great, lovely. So what I think for tomorrow for London Open, if we can get not 1 minute, if we can get 1 hour, if we can get pivot points daily, can take another pivot point for that matter. If we buy tomorrow morning, can do that, and then that, I will do that. I don't think they're going to be. I don't think they're going. Well, I don't. They can, of course, be in eventually. There will be close to gaps, but right now we have a new scenario, and it's going to take some time to price in all the fantastic news that this trade deal has made us. So because we now right now we have to price out all the bad stuff that has happened and then some more good stuff, because one, a lot of sellers got out of this area, and two, we are now having more optimism than ever that we are going to have great trade with China. Just 10%. Fantastic. Isn't that great? So I'll look into day trade. Yen pair is higher for the money flow of it. Dollar bullish so far. I might change my mind into my mind until tomorrow. It's fundamental. It's money flow reasons. But if people take profit, and I don't know if they're going to do, if they do take profit, I'm hands off. Okay? I love you, family. I miss you. And I hope that you will do forever be profitable. And if you don't, give me a message on DM and I'll try to help you out. Okay, cool? Boom.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. Happy Monday. Well, looks like we have a little bit of progress happening on the U.S.-China side. I saw last night that it was going to be a 3 a.m. Eastern Time announcement from Scott Bessent, and there's your 3 a.m. announcement. So Aussie up, dollar up, CAD up, New Zealand sideways. Dollar's leading the charge right now. Currencies have opened up quite a bit at 3 a.m. You got Japanese yen way weaker and the Swiss way weaker, euro pound in the middle. So interesting, explosion of volatility today. We had 3 to 4% gaps in the indexes. Futures market took a huge rip. Take a look at, today's price action is actually pretty sweet. It was pretty easy sell side this morning, just grabbing a few bucks out of the kind of the market. Shocked. Wow, we're up 3%. I mean, everyone's sitting here like the S&P is killing it today. It's like, well, intraday hasn't done anything. It was just all gapped up from futures. If you look at the futures feed last night, it was essentially all happening at 3 a.m. Eastern Time. So this was a gap open on probably some optimism, and then there's your official announcement at 3 a.m. So I look at that as, if you're already in, if you bought the gap and you're waiting, that's tough to trade. It's one candle. There's been a little bit of follow through. Let me go down to like a 1 minute chart. I don't think you really got any of that trade. If you try to trade the 3 a.m. candle, look at that thing. That's a 1 minute candle on the futures market. So you would have already been in just based on sideways movement. That's around 6 p.m. Eastern Time all the way to 3 in the morning. So you got a couple points. We're literally talking about 54 to about 68, about 14 points on ES, and then just one massive candle to the upside. So that 3 a.m. announcement is pretty much what put us in to our current price. Candle closes here. Current price is right here, like within just a couple of points. So pretty wild stuff. I'm, pretty happy that away from the all-time highs. So we're still X amount from the all-time highs. We're still about 5.5% from all-time highs, and I've just crossed highs for the year by about 40 grand. So I'm curious, if this is going to be just an island gap. Is there something that's going to fill this week? We still have CPI data coming out on Tuesday, I believe. So Tuesday, May 13th, here's the CPI news coming out tomorrow morning out of the US. It's going to be all CPI numbers. I thought was kind of interesting. So the previous core CPI was 2.8, and it's forecasted for tomorrow to be 2.8. The previous year over year was 2.4, It's forecasted to be 2.4. So taking a look at trueflation, we've still been trending lower, which is not a bad thing. But as with everything else, I mean, there is going to be a backfill in this move. Judging by, I mean, let's just zoom in here on a smaller time frame. Judging by the way this market is gapped, even in the futures market, we've got some huge gaps. So, I mean, that's an obvious gap right there. This one is still like a tiny little sliver gap. Gap here and gap here. Now, I do see these gap opportunities as buying dips, like buying the dip. It could be back down here towards the 5,700 zone now. I mean, this whole thing with U.S. and China, it's been another 90-day window. The U.S. has backpedaled from a 145 down to 30. I think China backpedaled from a 125 down to 10, and the market's loving it, right? It's going to take months, if not years, to really ink and officially, make a trade deal. But the market is just like completely moving on headlines. It's completely moving on headlines. So anyway, if there's some profit taking, expect there to be some gap filling. I still would like to be buying some dips in this area between about 5,500 or so. I'd say about 5,600 to 5,400. I kind of look at this as an opportunity to find some gaps. The one thing that I find a little concerning is what is happening to U.S. yields. Okay. U.S. 10-year yield is still higher, like exploding higher, actually. So we're back up to, we're up 32 basis points since the first of the month. And this, whether you pay attention to this or not, look, if we break this high or we come back to this high, this Liberation Day announcement was what kind of broke the U.S. bond market, right? If you look at the 20-year yield, if we get back up towards 5% of this 20-year yield, something is probably going to happen. Like that was what made Trump and co flinch with a 90-day pause, because we saw just yields move like crazy. That was the basis trade blowing up. And I guess if we're lucky, we're just going to see it kind of chop around in here. But I have real concerns if the 20 years over 5%. I have even greater concerns if the 10-year is going to 5%, because we were there in 2023. So I think this ultimately chokes off growth. This might be exciting, like, oh, the markets are on their way to all-time highs. Like, yeah, maybe they are. But a reality check is coming down the road at some point. So I shared this. Let me see if I can find the screenshot. I did this on YouTube last week. I talked about kind of this paradigm A, B, and C. Is it this one? Yep. So I had a YouTube video. This is a thumbnail if you look for it on my channel. But paradigm A, B, and C, and I'll just kind of explain these really quickly. So this is somebody I follow pretty closely on the macro side, Darius Dale of 42 Macro. Paradigm A was the Biden administration. Paradigm B is coming in with Trump, trade war, flexing muscles, recalibrating the entire global trade picture, and obviously making it America First policies. Paradigm B broke. Like the Trump administration was broke. They flinched, and we saw the basis trade break. We saw the bond market break. And it wasn't a break per se, but it was definitely it was like cut hard. And that was the instant flinch of, hey, we're going to do a 90-day pause, and it just gave the whole world a little sigh of relief. So paradigm C is, we've talked about this, the K-shaped recovery was since COVID, right? So the haves and have-nots. If you have assets, you do very well. If you don't have assets, you deal with higher prices and getting left behind. K-shaped recovery, right? That was paradigm A under Biden. Wealthy people did very well. The 1%, the 10%, those that have investments, those that have assets did extremely well during the Biden administration. Okay. B was supposed to be change this, okay, close the gap and create more of a E-shaped recovery where we can level things off and improve. So instead of having, the lower end get hurt worse and suffer more, it's like we're going to try to uh, create some improvements to inefficiencies, right? So you narrow, Main Street, Wall Street a little bit. Well, that was the pain in Wall Street that Trump and co were talking about. There's going to be short-term pain for long-term gain, but with the basis trade, with the bond market, snapping the way that it did, it really showed how fragile the entire system is. And so I think this got pivoted to now maybe something like this, if we're lucky. It's just been angled up. So those that have still have more and still do well. I think this is going to be potentially putting us up into another bubble. I think we're truly seeing that the Trump administration doesn't want to see more pain in the stock market. They saw it once, they tried it, it didn't work, it backpedaled or backfired, so they backpedaled, and here we are watching the markets up, 20% off the lows, and I think if we break to all-time highs with momentum, we're going to face another bubble. Just like we've had since 2018 to now, we've had all these highs and lows and all these highs and lows. We've had 7 pullbacks in 7 years of 20% or more. It hasn't been every year, but like we've had 7 total pullbacks of 20% or more in the last 7 years. So I think these bubbles are just getting, they just swell more, they happen faster. Obviously, people have been conditioned to buy the dip for a long time. But point is, it's just stuff you need to be aware of, like bigger picture. I think there are concerns. I mean, I think if we get to, all-time highs, I'm sure it's going to be celebrated, right? If we get to all-time highs, I'm not going to sit here and say like I'm calling the top, I'm calling the top, I'm calling the top. I think that's crazy. But I just want us to be aware that there's got to be a way to measure out like some type of move where, okay, if this thing runs, let's say, connect the dots at the highs, right? So we have resistance here, and we run up into, resistance again. It's like, can we get to 6,800? Can we get to 7,000? Sure. But after this stretch move, it's like, well, are we talking about a 40, 50, 60% move from the upside? Let's just say we go from the April lows to 7,000. That's a 45% move, right? Let's say that happens in like the next 12 months. I mean, it's just wild amounts of volatility. But does that mean we have to top out at 7,000? Not necessarily. I don't know. I mean, honestly, I'd almost think it'd be easier to not have to trade a freaking bubble and see this market crash. And it's like, well, we're going to have a broadening pattern. And we have, a 45% rally and then a 50% drop or something insane like that. I'd almost rather see this market figure out where reality is, because it's not like right now is not reality. Whatever's happening right now is not reality. All this is self-inflicted wound, all this soft data that has yet to become hard data. The market's not pricing all these bad things, US slowdowns, like market's not pricing any of this stuff in yet. Earnings have been fine. Buybacks are as high as they've been since like 1984. I mean, so look, money's still going to the system. The narrative on the trade war has been much improved. So at least right now, because we just poked the highs, it's like, okay, well, I see a dip. If we get a dip like this would be a reality check. That's fine. A little dip that we can buy and then justify participating at all-time highs. Okay, cool. I can get behind that trade. The hardest trade for me to wrap my head around is no gap fill, no gap fill, no gap fill, no gap fill, and the market just goes straight up to all-time highs. Like, that is the dumbest trade. That is the stupidest chase to all-time highs. And if it goes higher, it's just a matter of like, okay, when does this thing roll over? And if it does roll over, we're going to fill some gaps. And that's going to be, everyone's all excited and celebrating like, oh, we survived it. And then it's like we come right back and we backfill all these gaps. And just the constant head spin of, you're down 1 month and then you're up the next. And this is why they say like, don't time the market. Well, I mean, look, Warren Buffett may not be timing the market, but I have a Buffett indicator. Okay, here's his valuation model. This one, where it is total stock market value over GDP in the US. what is the Buffett indicator showing right now? Strongly overvalued stock market. We're 2 standard deviations above the historical trend lines on Buffett's U.S. stock market value to GDP. So Warren Buffett at nearly 20% of cash and Berkshire Hathaway, they've been a net seller for 3, 4, 5 quarters in a row, maybe longer. I wonder, like, as far as timing the market, when does Buffett deploy cash again in a big way, right? When is he a net buyer of stocks again? I don't know, but not now. And if we go to all-time highs, not now. And I just wonder, it's like, so does Berkshire just sit on 20% assets in cash, collecting 4%? I guess that's not a bad way to do it. They're not exposed, but they're also going to be said like, oh, you're missing out. You're missing out. Well, nobody said he was missing out when the market was down 20%. So anyway, nothing's perfect, right? So just saying, don't be surprised if we have a little bit of backfilling, gap filling, at least from this candle, this 3 to 4% gap on the NASDAQ. It's like we were up at one point today, I think over 3%. So from the close on Friday to the open this morning, up around 3.02%. Qs, I think we're up over 4%, starting to backfill as well. So I'm just curious if it gets closed on the week. Up 3.88% from last week's close to open today. The Dow, same thing here. Dow is up about 2.7%. The Russell, about 4.43% of Russell. So the first thing I did this morning, and I'll update this in Pulver Alerts since this is more of the campaign trade. Russell IWM, when we were up here at these highs, I rolled out some calls. So I'm going to add in, I'm just going to add a reply to this right now. So I'm going to go reply, IWM, covered call campaign update, rolled calls to 5:30 expiration 200, sell call for $1.30 credit. So new break-even price is going to be 195.70. Okay, so that's going out to everybody. Then also on Tesla, need to find my Tesla trade here. Tesla rolling calls. Yep, so I rolled calls this morning as well. So I'll reply to this one. Tesla cover call update. I rolled the 257.50 call with a 5:16 expiration out to 5:30 expiration and down to 255 call strike for $4.30 credit. Oops. So my new break even is, let's find it here. Tesla, my new break even's in the 230s, 235.27. $235.27 for 500 shares. I also rolled a 277.50 call to 5:30 expiration and kept the 277.50 strike for $3.79 credit. So no break even on that chunk would be 263.94. Okay. So rolled some calls on Tesla, rolled some calls on IWM. I did go out a couple weeks to do that. I'm just going to kind of keep using those to generate income. If we have a gap fill, then I'll pull out as much of that credit as I can. If we're back below $200, that's fine. Let's keep rolling calls. On Tesla shot up above $300. Again, way up here towards 320. room to pull back. I still like Tesla on the right-hand side of the trend line. Pull back to 280, 275, 270. Anything on the right-hand side. I mean, heck, we could pull back to 220. I still like buying Tesla. I don't mind it. Um, I'm obviously going to miss a little bit of this crazy upside if the thing just keeps ripping higher, but I don't know that. So I'm just going to keep selling calls, getting some time in the trades. And if it just stays out of the way, eventually I'll let it get called away. If it goes dramatically higher at some point, it's going to be not worth the time to roll because I'm only going to get minor credits for it. And I don't want to have to, roll out like 30, 45, 60 days at a time. I like rolling out like 1 or 2 weeks max. Okay. So anyway, net. So I mean, help me today on rolling those calls. So $1.30 on IWM. I have that on 11 accounts. So $1.30 on 11 accounts just improved my profit by $1,430. And then on Tesla, I have a 430 times 500 improves my profit by 2150. 2150 and another 379, so 2150 plus 379, so about $2,500 in improvements on just some covered calls. Not bad. MicroStrategy had a nice little pop. Bitcoin is overbought conditions with the daily time frame. I did say watch out for these all-time highs again. Look, I'll be as excited as everyone else if Bitcoin hits all-time highs and keeps running into the 120s. I just wouldn't be terribly surprised. What happened to my drawing tool? I wouldn't be terribly surprised if Bitcoin does come back in and fill this candle a little bit. So we pull back to, maybe 97,800. Maybe we pull back a little bit more into those other candles. Okay, give me 1 second here. Okay, so let's do dollar index, gold and silver, Bitcoin, oil, the works, right? We'll keep working our way through analysis. What's everyone doing? We seen some fresh highs in the morning. We stoked about this trade war stuff. It's like the rest. What trade war, right? Art of the deal, as they say. I just think the whole thing is stupid. So self-inflicted. Scrambling to see the market try to get back to all-time highs. I question like the foundation and the footing. I know the U.S. economy has shown resiliency, but I think the question is like, are we going to see growth? Are we showing resiliency or are we showing growth? I think we're showing resiliency, but I just have my concerns with the yields that still debt is not like crazy attractive. I mean, we're down to some lows again on TLT, down to some lows again on SHI and IEF. So like your 1 to 3 year, 7 to 10 year, 20+ year bonds look like garbage in the U.S. right now. Yields are still higher. Mags set. Look at this thing. Sheesh. Mags up another 2+%. Probably some resistance ahead. I mean, we're pulling back into this 618 retracement. If you look at the swing from high to low, so I wouldn't be surprised if the market does at least fill a gap. The nice thing about this with a lot of these structure plays is you look at this high and we are higher. I think a lot of this market is setting up for a potential bullish pattern. Now the bullish pattern still has a chance to pull back into a right shoulder or a right tip, and you want to see if you have that low to high, higher low to higher high. So if structure plays out, we hopefully will see a chance to kind of build positions again and then get our way back up towards these all-time highs, whether it's mags, whether it's the stock market. We'll see if that plays out. Okay, just give me a couple seconds here. I've got some quick messages. Okay. Let's go dollar index. VIX is down into the teens again, so we finally cracked that 20 handle. Bond volatility index, SPXY gapping higher. Wow, that's crazy. I was in and out of this trade like weeks ago. I bought this thing down around $34. I closed out for about $37. I was actually pretty happy with that trade. It only took a couple of days, and now we're getting like a big push to the upside. So that would have taken another 2-3 weeks to, move the needle, but I'm happy I'm out of that trade. Dollar index. Let's go dollar index here. Dollar index. This did what I expected, which is a pullback. Now, I think the next question on the dollar is, are we in a range and this is just like the bear trap at the bottom of the range? Or is this truly anything that pulls back on the dollar here is going to be a chance to have bigger sell opportunities later, right? I mean, we pull back in this inefficiency. If you go from a high to low, I'm sure there's going to be some levels here, but I don't know. Look, I don't know if it's going to be this easy. If we have high, low, pullback here, I don't know if we just instantly break the trend line and then go make fresh lows on the dollar. Uh, let me throw this at you. So if we have lows here, okay, and this is a kind of a deeper, nastier, one of the worst starts the dollar seen in like 30 years. Is it possible that we have a low, high, higher, low, higher, high? We come right back into the halfway point of this. That would be the better sell spot on the dollar. So I'm just throwing it out there. If the dollar stuff is going to continue, you see it on individual currency pairs, but Aussie dollar, likely still has room to pull back. If you take this low, I mean, we could pull back anywhere between 6,300 and even like 6,000. We could pull all the way back in here and not do any crazy damage to the Aussie dollar. Still looked as a buying opportunity, and I would be targeting kind of open space swing highs. You look at euro dollar. This is the reward we talked about. If you were short euro dollar, I didn't have a perfect spot outside of if you sold it here, you got to be willing to sell at the highs. So area 1, area 2, it is going your way. You're now at the 30% retracement level. If we get to a 382 or 50, I would be taking profit on that retracement or moving stop losses. Okay? I mean, it's good that the euro dollar cooperated. We had this crazy run from lows at 101 or 101.50 all the way up to 115. That's a huge move on the euro dollar. So pulling back on one of the more liquid currency pairs, yeah, I mean, I want to see this thing at 110.50. I want to see this thing at 109. Okay, I mean, heck, I want to see it pull back to 106 if possible. But the sell side was the trickier spot because the dollar was just so beat up. So anyway, point is, if you're short euro dollar, I think eliminating risk might be at least step one. If this wants to run a little bit lower, that's good. Once you get into some achievable levels that you're happy with, then move stop losses, start trailing some profits. Not a bad spot. Pound dollar turned as well. This is a difficult one to trade, though. I think euro dollar had a better structure set up. New Zealand dollar pulling back, same thing as Aussie dollar. We have room to pull back into this area. That could still be a swing trade. As long as we don't break this low, swing into some open space, and we trade this thing all the way back to 63.50 or so. But I want to see some pullbacks. Does it mean I'm short in New Zealand dollar? No. Right? I said wait for a pullback. If you're short, then there's an equal high you would have shorted. That's a great spot to enter, and it's working out fine. Dollar CAD. Dollar CAD. This is why I wasn't excited about selling. This to me looked like a pinch and a falling wedge, and we're getting a squeeze to the upside. Dollar Swiss. This one looks better. Dollar Swiss making a nice run. So, pulling back into this little cluster. I still like this trade back into this pocket around 87 to 8,800. So that's what I'm watching for right now. My spots here, let me check on some of my positions. Okay, so dollar Swiss. Yeah, we're looking better. So checking my break evens here. So Aussie Swiss, I mean, much closer. So Aussie Swiss behaving. What I'd like to see is if we're putting in a bottom here, kind of grind up into this pocket. I've got some good profit already. I'm trying to get back into this little cluster of support resistance. I might take profit and then start looking for a swing trade into a 3-wave move. So this is down, wave 1, 2, 3. That might be enough for me to say I'm good on the trade. There could still be a 4th and 5th wave coming, but if I could reload on a pullback for a wave 3 push, that wave 3 could pay out very, very well. So I could have a chunk of profit on this recovery, and that could be chunk 1, enter in for trades on pullback wave 2, and then get a push to symmetry on wave 3, turn that into another big win. So that's kind of across the board for my Swiss pairs: Aussie Swiss, CAD Swiss, Euro Swiss, Pound Swiss. I'm out of. Once this thing broke higher, I got out of this trade. So my Pound Swiss trades were much earlier on this support. We got back into all this indecision. I closed the profit there. Also, I wanted to get out of the Pound Swiss because it removed some margin from me. But if you are in Pound Swiss, this is working out like I expected, which is pulling back into closing this pocket here, closing this pocket here, right? So I do think this has more upside to like the 12 and 1300 zone if you're holding. But the margin for me as a US trade with 50 to 1, this one is more expensive than the others. So I didn't trade New Zealand or a Pound Swiss as heavy. New Zealand Swiss, same thing. Is this a 1? Are we pausing? Are we going to get a push? Is this a wave 3 and then 4 or 5? Either way, if I'm getting maybe a profit chunk in here, 1, I'm hoping this is a 2 that I can reload in, and then a 3 to symmetry. I'd like to see a symmetry wave that gets back above the 200 moving average, and I'll take some profit there. Okay, so dollar Swiss looking better. I think we pull back on dollar Swiss towards, if we get to like 8,800, I'm going to be pretty happy on this trade. So we get to like 8,750, 8,800, I'll be pretty happy there. I'd like to say we come all the way back to 92, but just kind of watching to see how this behaves. This may not be like a full directional move either. This might be short-lived. We could be pulling back a little bit, pulling back to retest the lows again. It might take some time to carve out the lows. We might have to get in the right-hand side of the trend line. But if I'm patient, willing to hold this, rates have still come down. Swiss is at 0.25, dollar still hanging at 4.25, 4.5. If gold is dropping, like the dollar's recovering, gold is dropping, that's also helping my Swiss. So I'm short Swiss. I'm short against the Swiss, meaning I'm a long Aussie Swiss, long CAD Swiss, long Euro Swiss, New Zealand Swiss, dollar Swiss. Gold dropping. Okay, this is what I wanted to see. So gold is consolidating and still consolidating, which is fine. If we get a deeper pullback in gold, that's also fine. This is why I'm hoping that silver looks a little bit better. I mentioned this last week, but if you take a big picture look at gold and silver, if this ratio ever plays out the other way, so we've had, this has been the highest of highs with gold versus silver ratio. That was back in, was that during COVID? Yep, that would have been COVID. Silver, gold got up to 130 against silver. But then, I mean, that's a huge turnaround. So I'm curious. I mean, does this end up being a movement back down where gold silver the ratio kind of rebalances? Does it get to an extreme and then it rebalances this way? Either way, I still think both trades are solid. I just think silver, to me, having a 2011 high, having a 1980 high, I like the trade and I like the upside that I can measure. So high here in 2011, high here in 1980. I'd love to see silver, continue to run its way up into the 40s. Okay, Bitcoin, like we mentioned on the daily time frame, I think we have some pullbacks coming. Probably pullback in like 98,000. If we hit the all-time highs, that's fine. I'd almost like to see this happen first. I'd like to see us pull back to 98 before we get to all-time highs. I'd honestly like to see us pull back into this structure also before we get to all-time highs. It'd be nice to feel like as we get to all-time highs, we're actually going higher instead of, like I've mentioned, well, if we just run up here with no pullbacks, then we're just going to run up here and probably come back. So I think if anything, you should be encouraging a little pullback on Bitcoin, maybe a little pullback zone on Bitcoin, because if we're able to participate with a dip or a dip, that once we get to all-time highs, we don't have to stop. We can just keep going. But if there's not much pullback here, I think these inefficiencies just cause some gaps to get filled, some inefficiencies to get filled back in. MicroStrategy up into the 400s. I do have some covered calls into. Let me see if I can freaking roll this. I don't know if this is going to be great, but I've got a couple. I've got like 300 shares of MicroStrategy right now. And let me see MicroStrategy here. So I've got a 310 out to June. I don't want to roll this out too far. Let me see what the expiration is. So June 20th. If I roll this, I mean, I can roll it out to June 27th or July 18th. That's a big fat credit for July. There is a lot of uncertainty there. I'll cross that bridge when I have to, but for right now, if I went out to the end of June, keep the strike the same at 310, I can still get another $2.50 out of this trade, which isn't awful. It's not great, but it's a lot better than rolling it out by 30 days. So let me see if I can get like $3 out of this roll real quick. I'm going to keep the strike the same at 310. $3 not filling. 290 not filling. 280. Just going to try to grab a little bit more income out of this if I can. 280 not filling. 270. Okay, just going to keep pressing this lower until I get filled. 260. 250. Come on, man. Be generous, would you? 245. All right, just got filled at 240. Okay. So that's an MSTR. I rolled to June 27th. And that's the same strike at 310 for a 240 credit. Okay. So same thing here. Have the shares. There's my call. Roll this out a week. Keep the strike the same. Filled at 240. Filled. And this account should be the other one. $310. Roll. Rolled out by a week. 240 at 310. Filled. All right. So that lowers my cost basis a little bit more. Break even 254. Bring that cost basis down a little bit more. So 254.97 minus 2.40. Now it's 252.57. Rolled to 627 expiration for 2.40 credit. New break even is 252.57. Okay. So that way, if it gets called away at 310, 57.43 a share times 300. Still makes 17K on MicroStrategy by June 27th. Not bad. All right. I'm seeing some yen pair requests. Sure, fine. Okay. This is doing exactly what we talked about. You saw the bottom here, August 5th. You had the courage to buy this low. You know, it was obviously tread lightly when the market was crashing on Liberation Day and post-Liberation Day, but the V bottom that came in, all the yen crosses have been cooperating. So, you know, if you've been buying dips on CAD yen with equal lows, it's worked out pretty nicely. You know, euro yen obviously behaved differently with the dollar, but still, you buy equal lows, it's paid out really well. Pound yen, equal lows, it's doing its thing. New Zealand yen, August 5th lows, doing its thing. Dollar yen, what I say the dollar yen could pull back to, probably 148 to 149. It could be more, but you know, same lows, right? This is a 140 low, held up really nicely. Here we are, 800 pips off those lows. If you had the courage to buy them, it's not. Look, yen pairs are not easy. They're never easy. But if we don't do any damage below this level, this was a risk-on trade, and now it's 800 pips of opportunity. So if you took advantage of it, there it is. That's what I see. You know, I mean, unless we're going to have like a big risk-off trade, it's like I don't really see this changing much. So I mean, right now it's like I would not be selling, you know, dollar yen until we're on the right-hand side of this trend line. This could pull back right into this cluster, right? And we'll see, does the market break back above it and continue to be just this huge range trade like this, where all we know is the dollar yen is we had a July to August structure that could be, you know, this kind of permanent range trade that, you know, it's just not easy. It's not easy to know, like, are we going to make fresh lows on the dollar yen? Are we going to make, who knows? I'd say right now it's like you got to trade what you see on the yen. You had a good opportunity to buy these lows, and you had some direction going your way. That's all you can ask for. So if you're taking advantage of that, good. If I'm looking for a trade right now in the yens, I don't have one. You know, all these have already made the pullbacks that have been talking about the last, you know, 3-4 weeks. Gold and silver, yep. So gold's pulling back as expected. I want to see more. I mean, consolidation is fine. Consolidation's fine. Consolidation is fine on gold. Just takes away a little bit of the attractiveness of it. Gold obviously had a good run with risk off trading. We're getting less than that right now, and the market's recovering still. But if the dollar is going to recover more to the upside of DXY is going higher, then I can see gold falling lower, which is fine. I still want to get position on gold long, whether that's 3,000 or 2,800 an ounce. That's where I'm going to be at. Okay. So if we pull back to, you know, 3,000, 2,900, 2,800, I like gold a lot. If it's just going to be sideways here, it's okay. I like silver more. So silver is still my preferred trade, especially if it breaks some highs at, you know, 35 bucks. I think silver has a lot of upside potential, but we need to break some key levels. There's still a lot of support. We could have pullbacks in silver to 29 and 26. I'm still interested in buying those pullbacks if they're offered. Otherwise, we break resistance. Let's go higher. Okay, Ethereum finally showing some love on the right-hand side of the trend line. I don't have any exposure on Ethereum. I did trade some EETH last year, ETHA, you know, some of these like ETFs. The EETH is a little better with pro shares. But anyway, I don't have anything. I'm still, you know, I like Bitcoin a lot better. I'm in IBIT quite a bit. Got covered calls that expire this week at 62. I don't necessarily want to cover them more. I could, but I don't want to. This is one that, like, I want as much price appreciation as possible on IBIT, so I'm not trying to get in the way. If this thing's going to run to all-time highs, if Bitcoin's going to run to 120, 130, 140, you know, I don't want to stop this thing and collect just a tiny bit of premium. If I'm going to sell more covered calls than IBIT, it's going to be, I want this thing to run, and then once I think we're kind of overextended, then I'll start selling covered calls, so I can collect a premium but not necessarily forfeit any of the capital appreciation. All right, EWJ, it's Japanese yen. DAX was up to all-time highs, fading a little bit today, but still fresh all-time highs. What a crazy V bottom that was. FTSE still almost to the highs. Argentina just poked all-time highs. China, nice little lift off from last week. Brazil and Latin America still looking pretty good. Mags, as I mentioned, gapping higher. Just be conscious of this. We have a pretty good gap here on Mags, pulling back towards the 618 retracement, resistance. We could see some resistance there. We're kind of done with the earnings season on Mags. They've all kind of printed. There's been some more risk appetite coming in, some relief rallying, just because we're getting more news out of the trade talks. But Apple, big gap today. Amazon, huge gap today, actually. Are you kidding me, dude? That's so it's funny. We had an expiration. I had an expiration for one of my services with a 5.9 that I was looking at an earnings play, and it's like literally 1 day later. Had nothing to do with earnings. All the freaking move was after with this trade war stuff, but stupid. That was the difference between losing $270 and making $270. I guess $230, but still, nevertheless, frustrating. Broadcom off some lows. Google looking better, but got beat up on that Apple news last week. Meta doing its thing. Microsoft doing its thing. Netflix down a little bit after beating earnings and coming up to some fresh highs. Nvidia up here. Let me check Spotify. Spotify should be looking better. I've got a double broken wing butterfly on Spotify. So my put fly is fine. My broken wing on the call side is looking better. Still down a little bit. This trade ends up making about $250 on just the credit side. I don't really want to have to wait till June 20th to get these things to pin. But anyway, the good thing is we're below the lows. So as long as we stay, below the lows, that looks good for my call fly. If we start pushing a little bit lower, that's probably good to stay in between the range. So we stay below this, stay above this. Then I have it looks like this. Here's my call fly and put fly combo. So I have credit. I've got a peak on one side, peak on the other side. I've got risk if we're way up here or way down here. Then I take on risk. But hopefully it's going to stay somewhat in the middle. Okay, Tesla back up into the 300s. Just rolling calls right now. My calls are 255 and 277.50, which isn't great. Obviously, I'm like, oh, fudge, I'm down, $30, $40, $50 a share based on, the rip we've seen. But if I can still grab $200 to $300 a week, I'm going to grab $200 to $300 a week. Look, Tesla's not going to go up in a straight line. If we get, this gap today and all of a sudden price is just sideways, well, that's fine. I'll just keep rolling calls. If price pulls back a little bit, I'll keep rolling calls. So I'm not in a hurry. I might lose on the covered call, but I'm still lowering my cost basis on the net position, allowing me to build, hopefully a bigger gain. So, right now my Tesla, I own it at like 234. And that chunk gets called away around 255. So it's $21 a share times 500 shares. Like, it's fine, and I'll use it as an income source right now. Berkshire, still watching this one. I think this could be a range trade as well. This might be a good barometer for the market. If we, can't break highs, come back down to lows, or we just stay sideways for a while, I'm just going to try to sell a bunch of covered calls. Bonds, like I said, a little bit concerned in the bond market because we are going lower in bonds. We're going up in yields. This inverted yield curve stuff, if we look at the 10 and the 2-year. So the 10 and the 2-year still way above the 0 line, 10 and the 3-month at the 0 line. Mortgage rates, we're watching 20, 30 basis points increase. So average mortgage rate hasn't really changed much, around 6.75. Currencies, we did. I did get a nice trade on Lyft. So I'm holding some shares. I've got like 12 or 1300 shares of Lyft right now. And that's actually looking pretty good. So let's go Lyft. It's up around $7,700 since last week. Just have a chunk of shares. This put is worthless. I'm just going to let it expire. Only had to pay 7 cents for it. But the rest is shares and appreciation. They did announce a pretty big buyback. I'm looking to see if we get back into like 18, 19 bucks. Lyft might surprise us with a lot more upside. Uber's been pretty good. Uber is nearly trading all-time highs if Lyft gets off of its butt and has room to recover. Even if we're respecting some of these recent highs, I would love to see this thing run into like the 18, 19, 20 zone. There's also a huge gap back here that, let me see what the profit target is on lift. I think fundamentally we're looking in the 30s. LYFT. So valuation, price to earnings is still pricey, but yeah, $28 fair value. This gap fill would be around $29. So, I'd be happy here. If we come back to this gap fill, that's probably a spot that if I'm going to dump my shares, it'd be between $21 and $23. So initially I was excited about like a $17 to $19 price target. I'm going to raise it up to about 20 to 23 now. So I have them running, I have them uncovered. I'm going to let them continue to rip. Hopefully 19, $20. Maybe I'll sell some calls up here and try to get it called away. But I mean, I bought shares at under $12. So if I can turn this for, $10 a share, that'd be pretty darn good. Not bad. That's it. So, all right, I think I'll wrap it up there for my time this morning, and let's come back and do this again tomorrow. So, tail of the tape, everything's showing up. A lot of it's on the big announcement coming from 3 a.m. China U.S. terms of the trade deal. Look, it's going to take months to officially make this all happen. It's going to take potentially years for all this stuff to get legislated, if you will, to actually negotiate and ink these official trade deals. But the market is trading like nothing matters outside of headline news right now. So, U.S. earnings have been pretty resilient. Buybacks are as high as they've been in 40 years. Trade terms are improving because at least there's conversations happening, which is a lot better than being left in the dark. So, the comeback is good. I'm fine. However, I think that gapping up 3 to 4%, having multiple 1+% gaps, we're probably going to backfill a little bit. So I'm not saying I want to be short the market. It's not that. I'm just hoping that if there's a chance to buy a dip or looking at a structure trade, if we have a high and a high, let's say this market can at least pull back and give us a right shoulder. That would be at least giving traders a chance to participate in a swing, as opposed to you got to buy those highs, because if you don't buy those highs, you can't get additional appreciation. That would be the most frustrating run, is to have a 20+% correction that's literally a V bottom. The only buy would have been if you had the courage to buy this dip, which we did talk about. It was a pullback low, and we tested that on an equal Monday, and that was a cup and handle pattern that we've gotten to. So all my symmetry plays from low to high, higher low to higher high, it's been hit. Okay, if it's cup and handle, there's your swing, there's your projection. I hope we get a pullback. I hope this area, if it holds like this kind of neckline structure, it holds this area and continues to go higher, where we can at least participate in some type of pause or some type of pullback. I prefer a pullback. I'd rather see a pullback to participate in a swing, as opposed to, well, we just filled this, today's gap, and then here we are going higher. So time will tell. But overall, things are green today. That's good. Fresh highs in the portfolio. We're still 5.5 to 6% away from all-time highs, and I'm at, fresh portfolio highs for the year, which is good. Could be better, obviously, but we'll keep grinding. All right, thanks everybody. See you tomorrow. Bye. Let's see. Well, show's still running.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.